word. I mean, not a great deal to say on the Bank of England. 0.5% is where we stay. What are you saying now on when this rate's going to go up?
As you say, no surprise. I think rates are on hold for a long time yet in the UK, at least for the rest of this year. There's been some talk in recent weeks about them having to lower the unemployment threshold given the speed with which unemployment is falling. I'm a little bit doubtful about that myself. I think the risk is if they lower the threshold they could run into some credibility issues if unemployment continues to fall. I think it would be much the safer option for them is to adopt the US approach by keeping the threshold the same but underlining that rates are going to stay on hold even if unemployment falls well below that.
Right. 297 or thereabouts on the gilt yield. What's going to happen to this yield over the next few months?
I think from where we are now, it's been very, very choppy. I mean, you've seen we backed up over the Christmas period. Short sterling was under pressure as well with the strong data. Then we had some of the threshold speculation. It came back. We've now backed up again. I think we're going to stay in quite a tight range around current levels. I think there's been a lot priced into the UK market in terms of the strength of the economy, and I think the risk is that we could actually see yields fall back a little bit and short sterling recover a little bit of lost ground from here.
All right, we await the ECB, of course, as I mentioned. Let's talk about these peripheral yields. They seem to be lurching lower. I want to get your take on why that is. Do you think it is national merit, or do you think is the market still very much believes in this bond buying backstop from the ECB?
I think it's a little bit of both, to be honest with you. The backstop has clearly helped, much more so than I ever envisaged it could. That seems to have been a good source of support for the peripheral bond markets, and also you've got a lot of positive market momentum and the perception that the economy is turning the corner and that we're gradually seeing some improvement. Some of the data that we've been seeing both out of the core and the periphery in recent weeks has suggested that we are seeing the very early stages of some recovery, but I think it's still pretty lacklustre. I don't expect growth in the Eurozone as a whole to be much more than 0.5% or so for this year. Ultimately, I'm reluctant to say that we've reached the end of the Eurozone crisis. I think that tensions could return at some point, maybe later on this year if the recovery does disappoint. But certainly at the moment, peripheral yields are falling substantially. I mean, you saw the Spanish auction in Spain today, and we're at 4 or 5 year lows for 10-year Spain. It looks like it's going to go further in the short term.